Peter Rose, Longwood Currency Trading. You know, I've had some questions recently about why I use such big numbers in my examples, and when I'm talking about trading, you know, I'll say, oh, I made, $500 today or $1,000 a day or this week or whatever, when most are out there saying, well, you know, I made $50 today or I made $200 today. Why do I use such big numbers? And I'd like to talk to you a little bit about that and explain that for you. But first, we're going to go outside here and check on the wood pile, and I'll tell you why when we get out there. So here's the start of the wood pile for this year. I just had this new stack here is probably about another cord and a half. And then we got some space to fill in here, and we got 5 more cords coming down into here. So what's this got to do with Forex trading and lot size and stuff? Well, look, my channel is specifically designed for the trader with a 4-figure to a low 5-figure account. In other words, you trade minis or maybe a couple of full lots, 3 full lots, something like that. And you're learning the skills in order to make some real money. You're not going to make real money trading micro lots or even mini lots. Even if you were able to trade for $500, you're not going to run that to $20,000. Well, let's be reasonable about what we're going to do with our money. Do you think you're going to go into your job, whatever that job is, and say, oh, you know, for a 40-hour week, full-time job, you're going to pay me $40,000, but gee, you know what? I'm going to work 5 hours a week, and I expect the same amount of pay. It's really sad, and comments that I get from people who really don't know what they're doing. You know, you're struggling to trade and learn the skills, and you watch all this shit that's out there on the videos, and you listen to these fools, and then you complain about the stuff that I'm trying to help you with. I'm trading a 6-figure account, and I'm making good money with it. It took me a while to do that because I had to fight the crazy education that's out there. People that are talking about, oh, all you got to do is, make 1% a day on your money compounded and you'll make $1.4 million in 18 months. I mean, it's just asinine. It's just asinine. If you want to make a lot of money, you do that through Forex. Look, I was a real estate investor for 40 years. That's what I was able to retire with. And if you've seen pictures of the house, I don't know, look through the woods and you see the house that I paid cash for. And I paid cash for it before I had to sell my other house. That money just didn't appear because I wanted it to appear, because I worked for it and I invested wisely. And now, having retired, I wouldn't touch real estate for anything, because I think the opportunity is in the currency market. For those of you that are out there in sort of that target group that tends to follow me, the 21 to 34-year-old age group, you're the people that have 20 or 30 years. Could you do real estate? Well, sure. But do you have $100,000 to get into it right now on investment real estate? Investment real estate, they're going to want 30% down. 30%. In the stock market, the best you're going to do is 50% down. Oh, I'm going to trade penny stocks. Oh, okay, great. Go ahead and do that. And all the volatility and shit that's based on that. Look, I've been involved in looking at the financial markets since the late 1970s, early 1980s. I've done stocks. I've done options. At one point, I was one of my brokers' most active options trader. And I lost a lot of money. I made some money, and I lost it all, and then double that. till I figured out why that wasn't viable and a working thing. So I started looking at futures trading. I never got into futures trading because I saw the weaknesses and the traps that you can get involved in that. And I ran computer simulations and saw that, well, the computer might be able to beat that, but you're certainly not going to be able to do that. Unless you're very, very skilled and very, very careful. Why? Because of the gaps that are involved in it, and there are some other things. Regardless, if the currency markets weren't there, I'd probably be doing futures, because that's the next best thing. I mean, it's not like a stock where you can lie about the accounting and stuff. The price of wheat is based on what people are willing to pay for in the supermarket. I think the currency markets are better and safer and provide more opportunity than any of the other markets. Commodities, stocks, old tires, real estate, everything. And if you go to my website, longwoodcurrencytrading.com, and go to the currency trading page, there are 7 reasons why I think the currency markets are superior to all of the other investment vehicles that are out there. And this comes from someone that's been watching this shit since at least 1980, okay? Having said that, and to the group of people that I think are watching these videos, you can't get wrapped up in what all the hype is that you see around you. There's some very, very sincere people that are teaching and that are telling you solid advice when you have a big account. But the problem is that most of those folks made their money not the way they're teaching you. They made it a different way. And now they're not trying to make money, they're trying to protect the money that they have with these ridiculous only risk 1% of your bank. They talk about the stupid risk to reward ratio. They're using Fibonacci's to prevent you from getting into trouble and all this other crap. Do you think for 1 minute that any of that took place in their heads when they were learning to trade? And maybe they did learn how to trade, and maybe they just got lucky. So many of these guys got lucky. They had 200 to 1 leverage, and they just piled on 6 or 7, took a $10,000 account and had 6 or 7 doubling events at 200 to 1 and turned it into a 6-figure account. Now they're going to teach you how to do that. That's as stupid, guys. That's as stupid as the guy who runs through a minefield and gets to the other side and then turns around and tells everybody to follow him, to come on, because he knows how to get through a minefield. That just isn't the way it happens. And so if you're trading a small account, a 4 figures account or low 5 figures, you know what the potential is. But don't delude yourself into thinking that you're going to take a $20,000 US dollar account and replace your day job, because you're not. Now, if you got really good at your trading and you were able to hit those 4% or so of the trades that you're going to make over the course of the year, where you hit 10x or 20x profits, you might be able to squeeze out a yearly income. But you'd have to do that every year. That's not the kind of trading that you want to do. You don't want to go to your job every day and have them say, "Hey Bob, today we're going to pay you $200. And then you go in the next day and say, "Hey Bob, we're going to pay you $110 today." And then go in the next day and say, "Hey Bob, we'll pay you $125. You couldn't live your life that way. You wouldn't work for somebody like that. I mean, I know that's commissions earning, but you have to be really good in sales, and you have to understand how to average that money out. Most people aren't good salesmen, and they don't last because of that. So what about the folks that aren't good salesmen? What about the folks that don't have 100,000, or like the guy that bought one of my last buildings from me? He had to come up with $250,000 to buy that building. What are you going to do? what good will it be to learn this crap that's out there and shooting for these unrealizable goals? I'm trying to present stuff to you that shows you what you're going to be able to do when you get to certain levels of account size, and how you're going to have to change the trading just a little bit when you move from trading, let's say, 3 or 4 full lots, you have a $30,000 or $40,000 full account, to trading a 6-figure account where you are going to be able to replace your job income. Of course, the question is, well, I'm making $30,000 or $40,000 a year. How am I ever going to come up with $100,000 to trade a 6-figure account? I don't know. That's your problem. But you're not going to do it by trying to compound a mini account or compound a $10,000 account. Could the $10,000 account eventually get to $100,000? Sure. It might take you 5 years. Do you have 5 years that you want to fart around with this stuff? And the losses that are going to happen in between? There's a way that you can learn this stuff and have the confidence then to go out and do everything you can to put as much money into your account as you can, because you know you'll at least be safe and break even or make 10 or 20% on that money a year. And then when you get used to trading that size account and you have the skills, and then you get a $50,000 or $60,000 or $70,000 account, and you're making 0.5% on $70,000 risk. You know, in trading full lots, right now the U.S. margin requirement for if the currency pair was 100,000, in other words, 1.00000, okay, that's $100,000 for a full lot. The U.S. government requires 5% margin requirement. You need to have $5,000 in your account before you can make that trade. If you have $4,900, you can't buy a full lot. Okay? So the currency pair, let's say the currency pair that you're trading is not 100,000, but it's 1.248 or whatever that is. And the margin is now, which most of them are, on the majors. You can get away with a lot less than I talk about if you trade a cross or an exotic pair. Sure, you can. There's no question about that. The problem is they're not liquid. The spreads are really high, and the volatility will kill you if you don't know what you're doing. So you got to trade the majors. So, well, everybody trades the majors. You know, there's no opportunity there. Sure, there is, because it's not based on stocks or stuff like that. This is a $7 trillion a day market, and the retail traders only make up 15% of that market. That's a huge market. And the liquidity in those currency pairs that are called the majors, USD backed pairs, there's 6 of them. Some will say that there's only 5. It doesn't matter. There's about 6 of them. They're highly liquid, and you never have any problems trading them. And so that's what you're going to try to trade. So if you have a 1.2350 priced pair, that's $125,000, let's say, of currency value. You multiply 5% of that. So if you do that on a pair, the general right now is about $5,500 to trade one full lot, $550 to trade one mini lot. So if you're trading a mini lot and your margin is $550, wouldn't you want some runway, some money over that in case you were to lose a few times? You don't want to you don't want to go in there with $560 and lose 10 pips and be right at margin, and then you say, well, I can't lose any more because then I can buy another mini lot. You don't want to be in that situation. So if you're going to trade one mini lot, you have $1,000. If you're going to trade one full lot, you want to have at least $10,000, because remember, you got $5,000, let's call it $6,000 of margin. That leaves you $4,000 of runway. And then as you add profits into that and you're successful, then maybe you don't need the full $10,000 to take the risk on the pair. Maybe you split the $4,000 of the first pair that you trade, and you trade at margin on the second pair, which means that you only have $2,000 between the two lots that you're going to trade for a runway. And that's okay if you know what you're doing. And so the fact that I'm trading a six-figure account, you know, I don't trade a full lot unless I've got $10,000 behind it. So if I have $100,000, I'm going to trade 10 full lots, not 11 or 12 full lots, because I need $10,000. That's risk management. And so I use those large numbers in order to show you the types of fun that you're going to be able to have once you're able to get into those levels. What do you want to do? You want to hear about me making 50 bucks or 200 bucks a day? Well, you know, that's great. 200 bucks a day. Do you realize that it's as easy to make $800 a day as it is to make $80 a day if you know what you're doing? That being the case, then why wouldn't you want to take the advice or listen to somebody who's showing you how to get through that minefield? Not just, I'm on the other side and I'm trading a $100,000 account or $200,000 account. Look at me, how great I am, and I'm making $1,000 a day. Fuck that. That's not the point of it. The point of it is to help you through that so that you can get up to a $50 or a $60 or an $80,000 account and trade 5, 6, 8 lots. And then if you want to over leverage yourself because you've got a good trade, go ahead. Instead of trading 8 lots, trade 12, because you've got that flexibility, because you know what you're doing. All I'm trying to do is present a reasonable, logical, moderated approach to trading so that you can get consistent profits. Now, you could say, well, in listening to your videos, Peter, we note that many times you're talking about these large losses that you're holding through in some of your carry trades. I've been very upfront about that. I end up with these large carry losses because of 40 years of real estate investment. I mean, I've lost $1 million net worth twice in my life in real estate during economic collapses. Prices flatline. I was living in a condo after I got divorced. I moved into a condo so I could be close to my kids. I had left a beautiful house that was on the water, a slant roof Bauhaus contemporary house. I didn't want that space. I didn't want that aggravation. Just move into a condo, let somebody else do the snow plowing. If you don't live in New England and you live in an arid area where you don't have snow and you wish you had snow, yep, try shoveling it when it's wet. Anyway, that condo at one point was worth $250,000. And one of the economic crashes that hit, it went to $150,000. I don't know. It's a lot, 40%. It's a lot. I was able to come back from that each time because I know how to trade real estate. I know what those risks are, and I know how long it takes to come back. So each time I dropped $1 million of net worth, it took me 10 years to make it back each time. And so in knowing about that market and being at 70 years old, I said, enough is enough. So I started selling my portfolio off in my late 60s because I didn't want to go through another downswing. Could I have made several $100,000 more? Probably, maybe more than that by holding on to some of those properties. But I also would have had the headaches with them and all the problems that I get away from in trading currencies. And so I'm still saddled with some of the survival mechanisms of real estate in looking at the currency markets. It doesn't bother me to be $20,000 underwater on a trade if I'm trading 24 lots. Now, that's a large amount of money, and it is kind of a high percentage, but get that money, if I lose it, I can get it back. But more importantly, in understanding price action and how these things flow and what the value is and all the other stuff that you don't need to know in order to learn how to trade currencies, but you learn as you trade them. If you learn from the right person, everything will work out. I was just in a trade that I talked about the other day. I was underwater significantly, more than I've ever been in my life before. And I just had the conviction that in the long run, everything would work out. Well, it didn't exactly work out because I lost $4,000 on the trade. I just did that video the other day. But that was a small percent of my risk. It was only 1.6%, I think it was, on my risk. And $2,000 of that $4,000 was carry interest. So that wasn't really a trading loss. That was just a carry interest on the loss. It's a working expense. From a trading standpoint, I lost $2,000. So that's 0.75% against the risk. I mean, I would take a 0.75% loss just on a day trade and feel really good about it. This is a trade that went for 6 days, and I was so far underwater I couldn't breathe. So the trading becomes not do what I do, because I know where I'm going wrong and where I'm exceeding the risk bounds, and also what would be reasonable for someone like yourself. Even if you were to have a six-figure account, you wouldn't want to trade like that. And because you wouldn't be encumbered by the fact that you've been in real estate for 40 years and your risk management is different. I guess that's what I'm trying to say. So in using the bigger numbers and in talking about the risk management the way that I do, I'm talking about using $10,000, for example, on one full lot. And you see these idiot assholes out there that are 200 to 1 leverage, and you're trading offshore, and so you don't need but maybe $1,500 to float a 5 lot. It's crazy, because just a fart will take you out. Well, unless you really know what you're doing, you can't be messing around with that. If you're in a situation where you're offered 200 to 1 leverage, don't take it. Put 5% down like the U.S. requirements are, and some of the other countries are coming along to that, because those guidelines are there to protect you. That's what margin requirements are there for. They're to protect you. If you have 20 or 50 to 1 leverage and you drop below that, the brokerage company is going to close you out. They're going to give you a margin call. They do that to protect you so that you don't lose all of your money, but you lose most of it. But it protects them, because otherwise they're going to be in trouble. You know, during the Swiss financial crisis, I forget when it was it 75 or something? I don't know, look it up. Almost all of the FOREX brokers went broke. They got wiped out. And because they were offering high leverage, all their clients got wiped out. That's why the broker got wiped out, because the clients were on this high leverage. Everything went against them. They didn't know how to get out. They couldn't get out. The broker was weak. They were carrying the loads. They couldn't offload it into the general interbank market. Everybody went down. And so there were a couple of them that didn't. You know, the broker I'm with, they protected their clients. They didn't have the clients go under, and they didn't go under. There were a couple of other brokers that were able to do that too, because they were well capitalized and they followed good principles and rules. And so when I'm talking about, I made $500 today, that isn't to blow smoke at you because you're trading one mini lot and the equivalent of that would be $5 for you, and I'm making $500. Well, that's because I'm trading $100,000 against that thing, and I make 5 pips, I make $500. You do the same thing and make 5 pips on a mini lot, you make $5. So do the math. Nobody's stepping in your face. I'm just trying to show you and give you an image that says, wow, wouldn't it be great instead of making $5 to make $500. How do I do that? Well, email me and we'll talk about it and see if you'd like to take a course or take some consulting. I'm not in this to run a trading course. I'm not selling courses or whatever. I've got a course. I do consulting, but I'm not going to try to do 500 people or I'm not trying to make $1 million a year in trading courses or $80,000 a year in trading courses. I don't need it. I don't need the currency trading to live. I made enough money in real estate to retire and I'm okay. I love to trade currencies and I'd love to help you out. But if you're going to take my time to do that, you have to pay for it. And if you don't have the money to pay for it, you don't have the money to trade. And so that solves your problem right there. Because I'm not like all the rest of the educators out there trying to convince you to take their course and pay them money. I don't care. I would like to help you, and that's why I have almost 300 videos on, well, I think 280, 270, something like that videos at this point on this channel in 2022. We're mid-August 2022. So there's my resume. There's my backdrop of information that I can provide for you. If you do it any other way, and I'm not the only one out there that trades this way and that believes this way and that has structures and frameworks. I'm one. But I know how to teach it because I taught martial arts for over 50 years. And when you're teaching a fear-based thing like martial arts for your survival, you can certainly teach a fear-based thing when it's money, right? And so that's the reason that I use the larger numbers. My trading experience, if I trade $30,000 of my bank and I make a couple of $100, well, that's a great hit. That's great. If I take $100,000 and make a couple of $100, from a percentage-wise, it's not a very great hit. It's 2 pips. But look, it's $200. And so look at the power. If I've got $100,000 and I make $200, that's great, because $200 a day ends up being a pretty good amount of money over the course of a year. And how tough is it to end up with a couple of pips a day when you've got $40,000 or $50,000 account? Not very tough. And so the power of, okay, today I made 200, tomorrow I make 250, and then I'll make 1,000. And so over the course of that week, maybe you'll make 2,000. Maybe you'll make, I've had $6,000 weeks. I've had, well, you can say the same. Whatever you have as a gain, you have as a loss on a closed position basis. The percentage-wise is going to be the same if you follow the recipe that I show. Whether you're trading 3 minis or 3 fulls, the percent's going to be the same, but the dollar value is what is going to be different. And that's why you have to learn to trade by principles and process. And that's part of my course. I have one of the course books of the 4 that I have is process-oriented trading. It's foundations, principles, process-oriented trading, and advanced solutions. Those are the 4 titles of the books in my courses. So in my course, because I don't sell courses, either you're going to get serious about it and you're going to do the whole thing, or I don't want to take my time to mess with you. Try to figure it out for yourself. It cost me $40,000 to figure it out, as you know, if you've listened to my channel before. And so I'm trying to give you the life of the currency trader the way that it really is. It's not all winning. It's not multi-millions of dollars. It can be. I'm not there yet. I've made, so far this year, I've made probably more than, I said the other day, 80% of the W-2 workers. I don't know whether it's 80%, but certainly over 60% of the W-2 workers' yearly salary. I've already made that. I made that in I was there in mid-July. Okay, so am I on track to do double that? I don't know. I don't care. What I do care about is following solid principles and process so that I'm consistent and I don't lose a shit house when I shouldn't. Get out with a small loss and then work your running positions so that you can maximize their profits. And that's the way I try to trade. What the end result at the end of the year, I can't control that. The only thing I can control is my loss. And so that's why I am trying to give you a picture in your head that you're starting to say, well, if he can do it, I could make $500 a day. I could make $500 a day. And that's a goal that you can work for. What am I gonna do? Say you can make $100 a day, or look at these jackasses that are flashing their phones and they're making 50 bucks a day and jumping up and down? Come on. You don't jump up and down about 50 bucks. You don't jump up and down about 500 bucks. But if you're doing it on your phone, you're doing a signal service, and 50% of those guys are wrong. They're showing you the 50% of the guys that are right. It's called the gladiator syndrome. You don't know it? Look it up. So take the examples of the trading that I use, and guess who's just rolling up? Look who's coming. There's the Bow Dog. Bo! What a great place to wind this up. I have to take care of the bow. Peter Rose, Longwood Currency Trading. Have a great day and have a great trading day.